Okay, let's dive in. Today we're talking about refinancing your mortgage here in Australia. It's a big one, isn't it?
It really is.
Trying to figure out that perfect moment, the right time to make the switch.
Yeah, and, it's not always obvious.
We've been looking at an article that really tries to nail down those key signals, things you should watch for to help you get that timing right.
And it's not just about spotting the go signals. The article makes a really good point that knowing when not to refinance, when to maybe just sit tight is just as important.
Absolutely. The idea is to help you recognize those moments for your own situation.
Exactly.
So what's maybe the clearest signal? The article points straight at falling interest rates.
That's often the biggest driver.
And we're not talking like massive crashes necessarily. Even a small dip, the article suggests, can lead to pretty significant savings over the whole loan term.
Yeah, the example they used was on a $450,000 loan. A small cut could save you like over $15,000 in interest.
Wow. Okay. That's substantial.
It is. Practically speaking, it means, lower monthly payments straight away, frees up cash.
Right.
But, and this is crucial, the article really stresses this, you absolutely have to look beyond just the rate.
Okay.
Check all the costs, the fees involved in switching lenders. Sometimes those can really bite into the savings you think you're making.
Got it. So do the maths carefully.
Always. Make sure it actually adds up in your favor after all the costs.
Okay, so linked to rates changing, another big moment lots of people are hitting right now, their fixed rate term ending.
Oh, absolutely. This is a really critical window the article flags.
Why is it so critical?
Well, because when that fixed period finishes, your loan usually just flips over to the bank's standard variable rate.
This is often not great.
Generally much higher, yeah. Often pretty uncompetitive.
Yeah.
So refinancing right then, as the fixed term expires, lets you shop around and move without penalty.
Avoiding those break costs.
Exactly. Try to leave a fixed loan early and bam, you can get hit with really big break fees. It's basically the lender recouping the interest they expected.
Right.
Waiting until the term naturally ends avoids all that. Keeps your options open. Prevents getting sort of stuck.
Makes sense. Okay, what else puts you in a strong position? The article mentioned property value increases.
Yeah, that's definitely good news if it's happened to you.
How does that help specifically?
Well, higher property value means you own more of it outright. That's your equity. More equity lowers your loan-to-value ratio, your LVR.
The LVR, right.
How much you owe versus what it's worth.
Precisely. And if that LVR drops, especially below 80%, lenders see you as much less risky.
Which means?
Better interest rate offers, usually. And potentially, you might avoid paying lenders mortgage insurance, LMI, this time around.
Even if you paid it initially.
Yeah, potentially. LMI is that insurance for the lender that you pay, typically needed if you borrow over 80%. So a lower LVR is a big plus.
Okay. And your own finances play a role too, definitely. If your income's gone up or your credit score has improved since you first got the loan, that also makes you look better to lenders. Can unlock better deals.
Good point. The article also shifts gears a bit, saying refinancing isn't only about the numbers, the rate, it's a tool for personal goals too.
Exactly right. It's not always just about chasing the absolute bottom dollar rate. Maybe for you, the main goal is just reducing the monthly payment amount.
For more breathing room.
Yeah, more flexibility in the budget. Or maybe you do want to tap into that equity we talked about. Use it for those home renovations you've been planning for ages.
Okay.
Or another common one is debt consolidation. Rolling, say, credit card debt or a personal loan into your mortgage. One payment, often at a lower overall interest rate. It's about tailoring the loan to fit your life now.
Right. But it's not always the right move. The article is clear on that, too. There are times to just pause.
Yes, absolutely. There are definite red flags. We touched on costs earlier if the fees and charges to refinance outweigh the interest savings.
Then it just doesn't make sense financially.
Right. You need to work out that break-even point, as the article puts it. Also, if your equity is low, or maybe even negative.
Meaning you owe more than the house is worth?
Yeah, that can happen.
Yep.
Or if your financial situation, like your income or credit, has actually worsened since you took out the current loan.
Then it gets tougher.
Much harder. You might struggle to get approved for a new loan at all, or certainly not at a competitive rate. You could end up worse off. So knowing these pitfalls is vital.
So there are quite a few factors then. Market rates, your fixed term, property value, your own finances, personal goals, the costs. How do you even begin to weigh them up? Which one is the most important signal for you right now?
That's the million-dollar question, isn't it?
Yeah.
It really depends on the individual situation, but being aware of all these signals is the first step.
Refinancing strategically, it seems, can unlock real savings and give you flexibility. It's not just rate chasing.
No, it's about aligning your biggest debt with your current financial life and goals. Regularly reviewing your loan, maybe, say, every year or two. Just checking it against the market and your own situation. That's key to making smart decisions.
Thinking about your mortgage less like a fixed burden and more like a dynamic tool, something you can adjust. How might just checking in on it regularly change things for you financially down the track?
It could make a huge difference over time. And just a final note, for Australian expats, navigating all this from overseas adds another layer of complexity. Odin Mortgage actually specializes in simplifying refinancing for expats and non-residents.
Good to know. Lots to think about there.